Welcome back, everybody, to Strongman Personal Finance. I have a very special guest today. He's a fellow Boglehead, and he actually makes very professional videos, almost as professional as mine. I mean, we all know I'm a very professional YouTuber, but I'd like to welcome on Nick Doyle. Welcome, man. Introduce yourself.
Yeah, hi everyone. Nick Doyle here. I have a YouTube channel. The main goal of my channel is to help people achieve financial independence. I'm trying to have no nonsense, high value content that's pretty dense and informative, and provide the analysis you need to figure out things yourself. So I definitely believe in the Boglehead philosophy, investing fundamentals. I have big part of my belief is to focus on increasing your income rather than your returns from stocks. Like a lot of people are focused on get rich quick. I think you should be more focused on making more money from your job because it's a much lower risk and assured way of achieving success, in my opinion. So that's what my channel is about.
So you don't have any like 10x stocks recommendations for us today, Nick?
I don't think so. I could pretend like I do, but
yeah, that's how you get the clicks, man. Or talk about me, Kevin, which I've been doing recently. But eventually, I plan to shift back to more Bogleheads. I'm actually glad we're doing this right now because I've just pumped out like 20,000 Meet Kevin videos. I'm shilling for the clicks. I'm not gonna lie, but it's glad to like circle back and go back to the fundamentals. So I don't know how I found your channel, but when I saw it, I think I searched for like VT ETF, and yours was like one of the first ones that popped up. And I was looking at your videos. I'm like, man, this guy's like 100% Boglehead, no frills. So that's pretty awesome.
Yep. Yeah. I've been going for some of those search terms. VT was definitely one of them. So I'm glad you found it that way. I definitely think that that's the path to success for most people. Just keep it very simple, market weighted, global market weighted index fund.
So how did you find the Boglehead's philosophy? I mean, is this something new, or you've been doing this? I don't know how old you are, but I don't know.
Yeah, I've been doing it for a few years. I'm 34 now, so I think 7 years maybe I've been doing it. My uncle had started sending me books in the mail. Like one of them was the Boglehead's Guide to Investing. Another was Asset Allocation by Rick Ferry. There are several of them. And they just sat on my bookshelf for a while, and then I eventually got around to reading them and got into it. It's like, yeah, this makes a lot of sense. My only fault, I think, getting started investing was a little bit too late. And right after the crash, I was little into gold. And there's a lot of parallels between that and what the Bitcoin people are talking about now, where you think you have this revolutionary thing, and the current financial system is going to fall apart, and this is going to replace it. A lot of people are thinking that about gold in like 2012, and I think I was young and I kind of got into that for a little bit, but then course corrected and found the Boglehead philosophy, and makes a lot of sense.
Yeah, so I don't even know how I found Bogleheads. Like I remember when I was like 15 or 16, somebody gave me like a $100 starter kit. I don't even know. I think I just cashed it out and spent it on something stupid. But there was a book called The Automatic Millionaire by David Bach. And he's not like Boglehead focused, but I mean, he talked about mutual funds and this and that. I was like, oh, this is cool. So you mean to tell me if I just start saving as soon as I start working consistently and not time the market and, max my tax advantage accounts, you mean to tell me it's as easy as that to be a millionaire? And that kind of like started my my journey down the path.
Yep. Yeah, it makes a lot of sense. And it really is that simple. And I think a lot of people have a difficult time with that. Like they think, oh, there must be some secret and somebody must know the secrets on how to make this faster. And I don't think there is. It's really just speculation. You might get lucky, you may not. Most of the time, I think most people fail if they pursue that path. Like if you want to accelerate it, like I'm into financial independence, retire early. So I've been driving up my saving rate to try to, bring the retirement or financial independence state early. I don't know if I'll actually retire early, but I think really if you want to do that, start a business, build your skills, make more money,
start a YouTube channel.
Yeah, trying to find the next Tesla is, good luck, I guess. You might get it, you may not. You might not sell it in time. And that's kind of like a one-trick pony. Like, good luck repeating that. If you learn how to increase your income, you can do that every year. You have that skill, you can leverage it.
Yeah. So do you have any individual stocks, or just explain your portfolio? Are you VT? Are you VTI, VXUS? Like, how do you do it?
Yeah, I basically have the equivalent of VT. I used to have a couple individual stocks, not for very long periods of time, but I sold them. I just didn't like them in my portfolio. But started out with just the Target Retirement Index Fund when I first started, and then I kind of grew the portfolio from there. Now my portfolio basically one-to-one mirrors VT. It's composed of other funds though, so I have the good chunk in VTSAX. It's probably my largest holding. Pretty good chunk in VTIAX. And then I forget the exact tickers, but my 401k has the institutional emerging and developed market index funds from Vanguard. So I hold those to mirror VTIX 7525. I have a kind of a video that breaks that down more detail and how those roll up. But yeah, and then I also work 401k as the S&P 500 in the extended market. Same with my wife's 401k at work. So it's just matching the total market and rolling it up. Entire allocation matches VT. So
perfect. So you don't time the market at all. I like that. I mean, basically, like if you have VT or the equivalent, you're literally just buying the world at market cap weights, which means the largest companies get more represented than smaller companies. It's all based on market cap, which is basically the size or the value of the company. So, I mean, that's in my opinion, that's the best strategy, because, you can try to find inefficiencies in the market and, hopefully make an extra buck. But I mean, really, in my opinion, it's not worth the time or the extra taxes you're probably going to have to pay to attempt to do that.
Yeah, I agree with that. I think it's, I did buy a book on equity valuation analysis. One of my friends is taking an MBA at the University of Michigan. And he said, hey, you should check this book out. I checked it out. I'm like, this is really cool. It's fun to look at the financial statements. I'd taken a couple accounting courses at one point. It's fun, but yeah, not what I want to do. I'd rather be hiking in the mountains, or, I think my time has more leverage just building my career. And I've definitely benefited from that in the past 10 years. That's been a big focus of mine.
Yeah, I mean, a great thing you've said is focus on building your income, because, let's say you keep your expenses level. Let's say your expenses are $50K a year, and then you make 75,000. Well, you can invest 25,000. But the more you make, the more you can freaking invest every year. If you're making $250,000, $300,000, I mean, you can get rich insanely fast, and you don't even have to worry about getting crazy gains. It's all about how much you can chunk away into, these different tax advantage accounts and in, brokerage accounts if you max them out. It's that easy. It literally is.
Yeah, I agree. It doesn't sound too exciting at first. Like, a lot of people look at that and they're like, oh, I'm going to put in, $1,000 and it might grow by 100, $200 this year. And that's going to take me forever. But yeah, once you start piling more in, and, I think last year was another great year in the market. Well, you're getting 6-figure return on your portfolio after just a few years if you're able to sock enough money away. So that's, I think that's what most people should probably be focusing on.
Yeah, the beginning is slow. Like, I remember when I was in the military when I first started investing, and I was like, oh, I put in $400 every 2 weeks. I was like, oh wow, I have $5,000 in my retirement account. But I just kept putting it in, and every time I got a raise, I put in more and more and more.
Yep.
And now it's like, wow, this is pretty good.
Yep.
And you're 34, I'm 32. I mean, we're not old geezers, maybe to some people, but I mean, it doesn't take that long. As long as you really hammer it hard when you're young, you'd be shocked how much money you could have and basically never pay taxes on it again if you put it in tax advantage accounts.
Yeah, when I first found it, I really got into the FIRE movement too shortly thereafter. And I started focusing on cutting expenses. Like, hey, spend a Saturday renegotiating some of my bills. All right, picked up $1,000 a year from the insurance, funnel it right into the market, and go through all the bills. After, maybe a month, I'd probably figured out a way to cut out $2,500 a year. And, but that only goes so far. I think you really have to start shifting towards your income and the big expenses like houses or cars, keep it simple, don't overspend, and invest it. And that's really going to compound for you. And the skills, I mean, you talk about compounding, your skills can compound as well. I don't think enough people talk about that. When you start learning, like, and same thing with investing, you just start a little bit once a day. Like I remember asking one of my senior colleagues, like, hey, how did you get so far in your career? And he said, well, just take an hour every day and get better. So then I, bookmark, every morning I get up and before work, I spend an hour growing myself in some way. And like, just after a few years, it's amazing how much that pays off. And then you're able to, use those skills to get a higher paying job, invest more, and now you're getting more money from your investments. Everything's great. So
yeah, you really do have to focus on, improving yourself. I mean, you can't just work like 8 hours a day and then come home and sit on the couch like a fat blob and watch TV. Like you're going to have to read a book, maybe get a certification, whatever. I mean, like the past few years, I've been working insane. I mean, I wouldn't say insane hours, but I've been doing a lot of extra stuff on top of my job. I mean, I got an accounting degree and then I was like, well, maybe I should get my CPA license. That'll help me build my skills and make more money. And then, oh man, now I need to get a master's degree. Now I'm doing a YouTube channel. You do have to spend extra time. You can't just go to work, come home, and then really. Wait a minute. You bought one of my cups?
Yeah. Yeah, I got the deep breath one.
Everybody, he has one of the few freaking cups that have been. These cups are not available anymore. That cup is going to be worth millions of dollars one day.
Yep. As soon as you put that store up, I bought this one. I was like, oh, that's great. I have to get
it. Yeah, so just like going off to a side, like the only reason I took it down, I was like, I actually have like a subscriber that's a lawyer. And he's like, you should probably be careful with, putting Meat Breath's face and then selling it for, for whatever. So I was like, you're probably right. I don't want to, maybe if my YouTube channel gets really big, then I can, fight a lawsuit, but I don't want to deal with that right now.
And another aspect of that, though, you have most of your money in the 401k. Well, good luck collecting.
Yeah, I was thinking, I was like, what if these idiots do sue me? I was like, well, the vast majority of my money is in my 401k. I don't think they come after your IRAs.
Depends on the state. Yeah.
Yeah. But I mean, whatever. Even if I get wiped out, I'll still be fine. I'll just keep maxing them every year. And Did you buy my book?
I did. I haven't read it yet. I was going to try to read it on the plane, but I ended up doing something else. But yeah, I did buy it on the Kindle.
Yeah, I mean, like you obviously, I mean, you're extremely knowledgeable. Like I actually learned a lot of stuff from your videos. I thought I was the Boglehead master, but Mr. Nick here is definitely a step above me. But yeah, I mean, you probably won't learn that much from the book. You probably already know most of it.
Yeah, I like reading books. Like my spare time, I like reading financial, personal finance books, whatever. So that's one of my hobbies.
Yeah, actually, there was a period for like a couple months where I was just deep diving into like economics and finance and accounting. Well, obviously, I already know accounting, but I was just going hard. And then one day I was like, all right, I'm kind of bored reading all this. And I've had a big fast from reading financial books. But if you haven't read some of the classics, people, you need to freaking read them. So if somebody had to read one book, besides mine, of course, what book would you recommend?
Yeah, I would recommend the Boglehead's Guide to Investing. I think it's pretty comprehensive. It doesn't just cover investing and stocks or bonds. It also covers things like life insurance or planning for retirement at a very cursory level. But I don't think most people need to go much deeper than that. So I think that's that one. And then if you want to get into asset allocation, I think Rick Ferry has the best book on it.
Does he preach market cap weights?
Yeah, and that's where some of these older books, I think Ferry, I don't remember what Ferry recommended in the asset allocation book, but they used to talk about tilting and adding like small cap tilts or REIT tilts and so forth to the portfolios. I know Ferry recently has come around and I think recommends more like the 3-fund, 4-fund portfolio. In that book, at that time when he wrote it, he might have been kind of like advocating some of these minor tilts, but it was mostly market cap plus like 5% REIT or something like that.
Yeah, I tried to tilt for a little bit, which basically that just means you like if you tilt REITs, basically all that means is like let's say you're 100% VT, well you go 90% VT and then you do 10% VNQ, or that's a Vanguard REIT. That's basically tilting. So like I did that for a few months. I was like, this is stupid. I'm tired of tracking all these different ETFs. It's like screw it. I'm just gonna sell it and buy VT. And I actually got lucky because I think that year, last year or the year before, VNQ and VBR, I also had that. Those both outperformed. So I was like, cool, I'll just take my profits in my tax advantage account, not pay any tax, and roll it into VT. And now I got some individual stocks because it's just for fun, but I'm still like 95% VT.
And believe it or not, I had a couple individual stocks. The first one I bought was Tesla, and I think it was my wife was talking about buying a Tesla. It's like, oh, I want to support Tesla. So I said, well, how about we buy some of the stock instead and buy a Toyota? And so we managed to do that. And I think we put $5,000 in Tesla. And it was like the day after Elon Musk was on the Joe Rogan show smoking a joint or something, and the stock tanked. So I ended up selling it the first major run up it had in early 2020 before the pandemic. I woke up one morning, I'm like, another day of this massive surge. I just sold it. It's like, this thing seems overvalued. And yeah, granted it's 10x since there, but we 4x our investment and avoided buying a Tesla. So
4x
it worked out.
Jeez. Yeah.
Like a year and a half. Yeah.
And you thought it was overvalued then. Now it's in the stratosphere. Even now it's sold off. I haven't even looked. I think it's like in the 800s now. I mean, if you have like any basic understanding of investments, like that stock is just ridiculous in my opinion. But what can you do? You can only sit there and try to hope it dies one day. You actually you should have started your YouTube channel back then and just bought more Tesla and then just sold courses. You would have made that would have really increased your income, Nick. Come on, man.
I try to have a bit more integrity than that, but yeah. I actually do want to see people succeed investing. Like it actually irritates me to see some of what's going on in the finance YouTube space, because I believe a lot of people are going to be worse off than they would have been if they just bought the standard VT or target retirement fund, whatever it is. Like I think they'd be better off doing that, and they're basically just going to cost themselves in the future. I don't like to see it, I especially don't like to see people profiting on it, like selling courses or whatever.
Yeah,
like clickbait type videos about the latest, hot whatever meme stock, and
Bogleheads is all about cutting costs. And when I first got on YouTube and I saw these people, I was like, I cannot believe, number one, that this is legal. I was like, I thought you had to be a licensed financial advisor to preach this crap or to give stock recommendations. And here these guys are doing it. They're not licensed. They got massive YouTube channels. The SEC doesn't care. They got courses, $800, $900, or in Jeremy's case, up to $20,000, which blew my mind. But I actually called and verified that. And I was like,
when I heard that, I couldn't believe it. But
dude, I'm not lying, man. I am not making that up. 20,000. I mean, like he had multiple tiers. But 20,000 was the highest tier. So I guess when you call and you give him your net worth, because they ask your net worth, they may like adjust the pricing based on how much money you have, just so they can take as much as possible. But yes, 20 grand. Imagine how much opportunity cost you're getting by giving that loser $20,000.
Yeah, and it's especially deceiving. Like you can still appear to be succeeding. Like you might be getting a return, you might be making money, but over time, I think it'll be less than what the market's returning, and you're actually losing money if you compare it to the market.
Yeah, I mean it's all about building wealth in the long run. It's in like 2020. That was a stupid year, and all these dumb stocks went up. It's like, okay. I was like, okay. I mean, yeah, these stocks went up this year. What do you think is going to happen in 2021 or 2022? I mean, they're all overvalued. They're all trash. And then, of course, now it's happening. Now all these hype stocks are just getting decimated. And this could just be the beginning of that. And I was like, hey, I'm basking in glory right now because I've been dumping on these stupid stocks and these idiots for a year, and nobody's listened to me. And now now it's coming to fruition. So I'm really enjoying myself these last few weeks.
Yeah, I've been enjoying watching some of it too. Like I feel a little guilty about it. Like you should like enjoy seeing somebody else fail, but it's like, it's I think in the long term, the fewer people that see that as a role model, the better. And it's really back to, I think, what Warren Buffett was talking about, like in the short term, the market's popularity contest, and in the long term, it's a weighing machine. And you have these, like we were talking about Tesla, like I think they just announced their earnings and their stock's crashing today because, they have a bit of a supply chain problem. And when you have the stock priced to perfection, like, it's going to grow at 50, whatever percent year over year for 10 years and sell 10% of the cars in the world in a few years is, basically what it seems to be priced for. Any small disruption in that 50% compounding growth has like a massive impact on just a few years out. So now they're halting production, the stock's tanking. So, I mean, and you as an individual investor have no way to foresee that or plan for it. I don't think it really makes any sense to play that game. So I think it's a losing game.
Yeah, I mean, to me, it's common sense. If there's a stock that is massively shot up and everybody's talking about it, that's probably not the right time to buy the stock. Even if there's a legitimate case for the bull theory, I mean, you missed your chance, ladies and gentlemen. I'm sorry. I mean, I know all these YouTubers are probably preaching, "Oh, it's below 900, it's such a steal," but even then, that's insane. Like, come on, please.
Yeah, and the one that gets me is the retire on 24 Tesla shares or like 240 Tesla shares, whatever it is.
Genius. I call it a butt crack, but he's like, yeah, Tesla just goes up 20% in a straight line, every year or month or whatever. It's like, no, dude, it's not a bond. Okay. Yeah. But hey, I mean, I maybe I'm wrong. Maybe if you just buy 24 shares of Tesla and you can just live forever and, be a billionaire in 5 seconds. I don't know.
Yeah, I think it's definitely like Elon Musk, I think, is visionary. The company is going to be successful. It has been. Like, I'm for what they're doing, but that doesn't mean it's a good investment. So, and I don't think that's, a lot of people end up just buying investments based on familiarity or, whatever. And I think that's, a mistake, but I think people will learn eventually. Hopefully we can convince some of them to follow the Boglehead course.
Yeah, I mean, now's the time to really push it hard. I mean, that's why, I mean, obviously I'm focusing on just trashing me, Kevin, every chance I get. But I mean, the long-term goal of my channel is once I get big enough, I mean, I'm still going to do like hate videos and stuff like that. But I do want to focus more on, especially like stuff that you talk about. Like, I mean, and I'm not like just, blowing smoke up your butt or your ass, but your channel is like really good. Like if you want to learn like straight up Boglehead and like all the details, go to his channel. What's the full name of your channel?
It's Nicholas Doyle Achieved Financial Independence.
Yeah, go check him out.
He's or Nick really Doyle, yeah, my Nick. Yep.
And he talks about index funds, guys. Oh, I know, so boring, but it's good stuff.
Yeah, it's the other aspect to that is like this whole debate over international, like even within the Boglehead community, that's every day there's like a new international thread, and it's quite interesting. A lot of people, I've had a couple comments on my channel, people saying like, oh, well, I had some, but then I sold it because it hasn't done anything for 10 years. And that's, ideally you wouldn't do that. What you're choosing is your investment strategy. You should be sticking with it. But
look, U.S. stocks are just going to go up forever and ever and ever. I mean, historically, that's what they've done, right?
100% of world market cap.
I mean, I guess, if you extrapolate the trend, I guess, yeah, they would eventually become 100%, 99.9% one day in the future. Yeah, to me, the argument's ridiculous. It's like you're a Boglehead. You own the U.S. market at market cap weights. You don't try to time the market. Why not just extend that to the world? It's the same freaking thing, but everybody's like, oh, U.S. stocks did good. That's literally the only reason that people want to go 100% U.S. stocks. It's just because it did good in the last 10 years. They make up all these arguments like, oh, U.S. companies are superior. But no, it's because they looked 10 years in the past, and the U.S. line went up faster than the ex-U.S. line, and that's why they push U.S. stocks. I think the argument's stupid. I don't even participate. I mean, it's good like video fodder, every once in a while, but yeah, I highly recommend people have international, which you get with VT or VTI, VXUS, whichever way you want to do it.
Yeah, and I really boil it down to one simple thing. Like in your portfolio, why do you want to add an unnecessary risk of like a single country economy currency? Like it's like one political system currency, everything. Why have that single risk in your portfolio when you can diversify it for basically nothing? So
yeah, it's actually a huge risk that people don't even consider. It's like U.S. stocks, I think, are massively overvalued. I think we've been through an insane bull run, and I wouldn't be surprised if U.S. stocks sucked over the next 10 years. But I mean, I can't predict the future, but I mean, you look in the past, U.S. and international go through cycles, and it makes sense. One market gets overheated, the other one, is undervalued, and then eventually something triggers a reversal, and over the next decade, the other asset class outperforms.
Yeah, and it's really, the thing I don't understand, like, okay, maybe even if you could squeeze out an extra % or two, who cares? Like for most people, if you're investing for the long term and you're focusing on growing your income and your skills, you're going to reach your goals anyways. So then why take that risk just to get there a year or two earlier? Like, I don't think it makes any sense. But that's the way I look at it. And I think market cap's the best. Some people might be more comfortable with less. I guess that's okay. But I really believe in the market cap approach. I'm going to let everybody else figure it out for me. They can read the 10Ks while I'm on the mountain,
Yeah, man, it's so hard. Like when I was in the military, I didn't know anything about stocks. I didn't know anything about, the economics. I was just in the Army, and I did extremely well because I just freaking put money every 2 weeks into my, it's called the thrift savings plan. That's all I did. Didn't have to think about it. I went to the club every weekend and drank myself to death, and I did extremely well. And I think anybody can do that as well. The more you pay attention to the market and try to time it and be smart, which most people aren't, you're just gonna screw yourself over.
Yeah, and I think following this stuff, it gives people like a false sense of I know something and like overconfidence. And like I think it's good to understand. Like I also, when I was, first getting started buying, some gold and silver or whatever, I was reading a ton about macroeconomics and how the Fed works and the monetary system and all this stuff. And yeah, it's good knowledge, but I don't think it gives you an edge as an investor. So that's
no. and people don't have the emotional capacity. Most people don't have the emotional capacity to, buy stocks when they're down and, don't buy stocks when they go up. I mean, just looking at YouTube, you can see what's dominant. It's all the freaking clowns buying massive overvalued stocks. Nobody wants to hear about Bogleheads or, buying undervalued stocks. No. That's not how it works. So it's just proving us right.
And the one that gets me, one of the common things that people have against index funds, aside from supposedly being boring, but is, well, I don't want to have all the bad companies. Like it doesn't matter. Like even if you look at the statistics, I should make a video on this, but I was reading this the other day, and something on the like 60 to 70% of companies go bankrupt over like a 20 to 30 year period. And the index has still outperformed most active investors. You have professionals sitting around researching this stuff all day for their job, and they're not able to do better than that. Even the index that has all those 70% of the companies that eventually go down. So I like holding the bad companies. Like I don't care. Like that's just part of the process. They'll gradually reduce and the money is going to get reallocated to the company that's doing better. So that's one thing that gets me. I think need to look at that a little bit of a different way.
And people might think they have bad companies, but you might be buying you might be buying the next Tesla. I mean, I don't know how long Tesla was in the total world index, but I'm sure me and you have been buying it up ever since it got publicly listed, and we've reaped the benefits of it. I mean, it's like 1% of VT, I think, or something like that. I mean, that's how it works.
Scares me a little bit, but yeah, fine.
Yeah, it's like I want it to die, but then again, I don't want to lose, I don't know, 0.5% or 1%. But then again, I think it'd be a worthy sacrifice just to see all these people on YouTube go away.
Yeah. Yeah, I really hope that people kind of like wake up to this. It seems like people are starting to wake up to it some now that the market's starting to crash and all these, you can basically throw darts at a dartboard. I think Graham Stefan even did that, and I think his monkey outperformed the market for years. Yeah, I mean, a monkey can do it, so for a year maybe.
Yeah, I don't get how mutual, like actively managed funds have any investors. It's like, come on, you guys suck. You charge massive fees. You have portfolio churn, so you're passing on capital gains to your investors, and you guys underperform anyway. It's like, who is putting their money in these funds? I don't understand.
Yeah, and it's, I think like I remember at a younger age, it kind of made sense. You're thinking along the lines of, well, these people are professionals. They should be able to, I don't mind paying them a fee if they're going to get me a higher return, but that doesn't happen. So,
dude, I have woken up to professionals. Like you go on any like tip ranks and you have all the analysts. These analysts are morons. Like they put crazy valuations and price targets on massively unprofitable share diluting garbage stocks. Once I saw that, it like really clicked with me. It's like, yeah, the finance industry is full of the whole financial industry is just a bunch of scum, in my opinion. And they don't know what they're doing. That's why I have such a vicious hatred for a lot of these people, because I'm just so like ingrained in my Bogleheadism.
Yeah, same here. I just really don't like people, like seeing people make a dishonest living. Like maybe they think it's good for their followers. I doubt it, but it's definitely good for themselves. But yeah, it's challenging to see, and that's what's successful. But oh well, we'll keep fighting the fight, try to spread, the Boglehead philosophy.
Yeah, I'm definitely focused on the growth phase of just attacking these clowns right now. But like I said, one day I'll circle back, go over. I mean, there's only so much you can talk about indexes, but
yeah, it is difficult. I think I might start doing some more content on the FIRE or into like retirement planning. A lot of those subjects can get quite deep. Building a portfolio is pretty easy. I think the more difficult part is, actually retiring on it and living on the portfolio for 50 or more years. And that's the part that I don't think enough people are planning for. Even though we're young, I think we need to figure that out.
Yeah, I mean, my definition of retirement isn't just doing nothing. Like, I'm going to be retired when I have enough money where I don't have to worry about quitting my job in an instant. And I'm like, I'm almost there. Like, I definitely want a couple $100,000 more dollars, or maybe even $1 million more to get to that point. But once I get to that point, it's like, okay, well, I can quit my job whenever I want. My boss is an idiot. Okay, bye. I don't have to worry about it. And once you get to that point, I mean, you're good. You don't have to be, super ultra millionaire. You just have to be able to support yourself for a long period of time. And then, if you're retired, I think you should still find ways to make money. I mean, I'm sure I'll be doing YouTube when I'm an old, nasty, crusty man, or something, tutoring, teaching school. I don't know. Yeah. Stay busy.
Yeah, I definitely think it, and like retirement wouldn't be fun. Like, yeah, sure, sitting on the beach or whatever, doing nothing. That'd get old really quick. So I don't know. I always like to challenge myself, learn new things, do new things, try to have some kind of impact. So I'll probably never stop either. Yeah, one of the things that I think is interesting is life expectancy planning. I might be making a video on this soon, and that's the odds are really interesting. Like you have I ran it for my wife and I, and we have 10% odds that one of us lives till past age 100. So like if we're on track to be FIRE before 40 in this like a few years. So I mean that's like a 60+ year retirement. Like you really need to have your stuff figured out if you're going to embark on that. But yeah, I mean, I'll probably still be doing something that earns money. I may not actually quit my job right away. I actually like what I do, so it's not that big of a deal to me. But I really just want that freedom, like you talked about. Like you have the option. You might not exercise it, but I can.
Yeah, I mean, if you like your job and you're making big money, just keep doing it, I mean, you don't have to work forever, but if you can make X amount of money every year and you like it, hey, I mean, like my long-term goal is, once I get my YouTube channel up, I mean, it's up, but I definitely can't live off my YouTube channel. But once I have enough income streams and I have enough money saved up, yeah, I'm retired, but I'm still gonna hustle, still gonna try to, generate as much money as possible, because I mean, people might be shocked at how bad returns are going into the future. I mean, I can't predict the future, but it just seems to me like the returns we've had over the last decade or two are just insane. Like, I don't know how our economy's not growing that fast. I don't know how these stocks are going to keep going up 10% compounded per year. I just don't see it. I mean, I could be wrong, but you definitely a lot of people are severely underestimating how much money they're going to have to invest to really be financially independent.
Yeah, I think so too. Like, I obviously can't predict the future either. But we have had very high returns, and it's, when you look at the historical average, it's like 10% or something, maybe 7 after inflation. So we've just come out of a year of like 20% returns, or maybe even more. Like the NASDAQ might be 30% per year. And yeah, I don't think it can go on forever. Enjoy the ride while you can, but I think global diversification helps some with that. And then, possibly depending on your risk tolerance, everybody likes to hate on bonds, but that keeps you from selling in a downturn and panicking when your portfolio drops. It might be a good idea to have some of those in your portfolio.
So do you have any bonds?
I do not right now. My wife and we bought a house like December 2020, so like a year and a couple months ago, and it's absurd, an interest rate of 2.375% on a 30-year fixed mortgage.
Woo! Dave Ramsey thinks you should pay that off fast, man.
Yeah, well, inflation is making that cost less every year. So,
yeah, mine's like 2.8. It's like inflation's like 7%. It's like, yeah, I'm not paying this off fast.
Yes, we used to have like 10% bonds in our portfolio or something like that, but they're in my 401k. I sold them. I sold them and traded them in for stocks, and then I liquidated some of my taxable account to pay for the down payment on our house. So that I can't bring myself to buy bonds right now, and I'm borrowing at 2.37. I'm not going to lend it at 1.5 or whatever. But yeah, so
yeah, and especially if you buy, the longer the duration, or like the longer the bond's maturity is away, the more sensitive it is to interest rate fluctuation. So if you're buying long-term treasuries right now, and that's one thing I kind of disagree with some Bogleheads, is they're like, oh, what is the BND is the total bond index. It's like, no, if you buy that, I mean, yeah, it's supposed to be a stable part of your portfolio. So it's supposed to give stability. But if you buy that and then interest rates spike up 1 or 2%, that's going to get freaking annihilated. You're going to lose a lot of money. If you want to buy bonds, maybe buy super short-term bonds, because then you're not going to be as, exposed to interest rate risk.
Yeah, and that's why a lot of Bogleheads often advise just using like a short-term U.S. government bond fund. I actually was in like the Fidelity equivalent of the BND fund, but yeah, I think I talked about this in a video. Like if you are going to have bonds in your portfolio, you should be seeking the risk on the equity side. The bonds are just there to stabilize it. So like instead of say like 20% in BND, maybe like 15% in the short-term government one is better. Like it still provides stability, but you still get that extra risk. But instead of taking it in bond duration, you're taking it in equities, and that's more efficient. Or at least it has been in the past. I can't say it will be forever.
I mean, like we're both in our 30s. So, I mean, it's really not the time to really go heavy into bonds. But eventually, when I am 50, 60, I might be 30, 40% bonds, because you're going to have that stock part of your portfolio that, you're going to try to get long-term growth, but you need those bonds as a stable part of your portfolio so you can like slowly liquidate them every year and kind of live off that, because if you're 100% stock and you're 70 and then you need your annual, retirement check, and then stocks crash, well, you're freaking screwed. I mean, you got to have bonds when you're older.
Yeah, and one nice thing about bonds is, when the stock market crashes, you just rebalance, and you have a whole bunch of money to buy them on the cheap. But yeah, they do lower your returns, I think, in the past 20 years. Like even a 60-40 per portfolio only underperformed the S&P by like 1.5% or something. Like it's definitely something, but it's not life-changing. Like you're definitely still gonna meet your goals and, you know, be successful. So
yeah, I mean, you shouldn't be like 80% bonds when you're 30, but I mean, if somebody had 10% bonds or 20% bonds and they're 30, 35, I mean, like, cool, you know, especially now with stocks so lofty. I mean, if stocks crash, exactly what you were saying, your bonds will hopefully stay stable as long as you're in short-term bonds. You know, stocks crash, well, you trim your bonds and you buy the stocks on the dip. You know what Meat Breath always says, buy the stock, buy the dip. Well, now you can truly buy the dip because you have that stable part of your portfolio that's there, that doesn't fluctuate.
Yeah, and I think for new investors, like it could make sense just to have bonds to like initially to dampen the crash. Like you don't know how you're going to react. Like say you started in 2015 and come 2020 you'd built $1 million portfolio, then all of a sudden you have a $300,000 loss in a month. Like how are you going to feel? Like you might think you're going to feel fine, but you know, if you could dampen that to 200, you know, you might feel a bit better about it and be able to pull the trigger on selling some bonds to buy more stocks. And that's what my wife and I did. Is we started with 20% in bonds, and during the crash I actually cut, I think 5 or 10% of the allocation and put it into stocks, and like some in like April, some in July or something. I didn't do it right away, but I did it like spread out.
Wait, so you didn't sell your entire portfolio and then buy massively unprofitable small cap growth stocks?
That's the funny one. Like it got me last year, like on the boat. I don't know if you read the Bogleheads forum, but sometimes people come around and you get a ARC thread. Like, why do you all invest in index funds? You're leaving money on the table. Like you should be investing in ARC innovation. And that's
how'd that work out for you, ladies and gentlemen? ARC's just getting decimated, and I love it. I mean, it's just the Boglehead philosophy just perseveres no matter what. You just have to be patient. Yeah. You know, I'm so happy that what's happening now is happening. All these growth stocks are getting annihilated. And I think a lot of people are really starting to, you know, learn their lesson. The one sad thing is that it's always a cycle. It's like human nature. Like, you know, one generation learns, you know, don't buy stupid trash stocks, you know, should do indexes. And then the next generation, I'm a genius. I'm just going to buy Dogecoin and ARC and make $1 trillion. And everybody forgets, you know, that's how you get, you know, crushed in the long run.
Yeah, and I think Ben Felix even, like, I don't know if you've seen his video about, it's basically talking about why you shouldn't invest in innovation. And it's just like there's some mathematical basis to it and how equities get valued and so forth. I'm not going to recite the details, but you can watch it if you want to see that. But the long story short is, even with the invention of the automobile, investing in railroad companies was more profitable in the 20th century. You know, even with the plane, like same thing, like oil companies outperformed, you know, a lot of these other companies. So it's really interesting how markets work. And I think it's just part of the unknown. Like when you're projecting a company like Tesla, like 40 and 50% annual growth rate, both are extremely successful, but they make a massive difference in the valuation over a few years. And like, how are you going to get that right? And that's just how markets work with innovation.
Yeah, it's super risky because, like, if your assumption changes, like, let's say Tesla has one bad quarter, you know, and their growth rate is only 10%, you know, annualized or 20%. Well, that stock's gonna get freaking decimated, you know, like that's the risk you take. I mean, people think the risk is, you know, buying garbage index funds and not making a lot of money. The true risk is buying, you know, highly speculative assets that you think are just going to keep going up like they were before. And then it takes one single event, and then you realize that your entire portfolio, your wealth is built on a house of cards. So people have to learn, you know?
Yeah, hopefully they learn sooner. You know, like I said, it's kind of a guilty pleasure seeing some of these things fall apart. You know, it's like you're like, you know, I know this is going to fail, but the people are so arrogant telling me about how, you know, you're dumb for investing in VT or, you know, whatever. And it's like, and I'm so smart because I invested in ARC and Bitcoin. It's like, all right, well, good luck. You know, we'll see in a few years.
That's a solid portfolio, right? It's like every single person on YouTube has the same. It's so boring. I mean, people say indexing is boring. I look at YouTube, everybody has the same portfolio. It's like, oh, Neo, Tesla, ARK, Bitcoin. It's like, okay, you all say the same stupid crap stocks. Like, how is that interesting, compared to indexing? But, indexing, I mean, it is supposed to be boring. It's a good thing. That's why I try to like spice it up, go after meat breath or whatever, because people will subscribe, but it's a lot easier to grow your channel and then talk about it, by doing stunts and having a good time.
Yeah, it makes sense. And I'm kind of doing this as a hobby. I just want to make good content. And if I grow, I grow. If I don't, I don't. Like, I think right now I'm getting about 4,000 unique viewers a month. So, that's a pretty decent impact. A lot of people, learning about the Boglehead philosophy and these fundamentals. So I think for me, that's good enough. But yeah, I'd obviously like to grow my channel more and reach more people. So, but if all I can do is dilute the market so that we can't, people aren't making money off $500 courses because, we have good content for free, that'll be a success.
We should actually partner together and make a Boglehead course.
Yeah, that would be fun.
Think? Yeah. How much would you charge? How much should we charge for our course?
Yeah, I don't know. I've thought about doing something like that, and I've even thought about doing the pay what you feel it's worth model, which from a business standpoint isn't the best. Yeah,
it's like you're like, hey wife, we made 10 cents today. We sold 20 courses.
Yeah. I don't know. I think it's I don't know what it would be. Maybe depending on the length of the course and the breadth and depth, probably somewhere $50 to $100, like, seems reasonable to me. I mean, the content's definitely worth more. So like it's definitely worth more than $500 probably to most people.
Yeah, I mean, I go back and forth about making a course. I mean, I can talk taxes, Bogleheads. I mean, like, I probably could charge a lot of money for it, but right now it's just like, I'm in tax season, I'm doing YouTube. It's hard to like find the time to do, all this stuff. But eventually one day I might be making a course, ladies and gentlemen. I may even do a 69% coupon code.
Yeah, we should talk about that. I've been thinking about it too. But yeah, it's there's a lot of complexities. Like, I think I had a video on asset protection. Like that stuff's a really interesting thing. I don't think it gets enough attention. There's a lot of aspects of personal finance that I think get overlooked.
Yeah, there's actually, like, people will focus on stocks. It's like, no, you also need to worry about like cash management. You need to worry about insurance. What if you died tomorrow? Maybe you should probably have some life insurance. Everybody talks about Tesla. Nobody talks about like the actual true fundamentals of personal finance. It's not just stocks, ladies and gentlemen, but it's boring.
And in my opinion, investing shouldn't be exciting. Like, get your excitement elsewhere,
I mean, honestly, I think it's fun because it's like, wow, I maxed my 401k this year and I have $20,000 more in my account. Wow, I'm getting richer. I enjoy it. Like, I check my 401k. It's like, oh, it went up. I like it.
Yeah, I enjoy that too. And that's like, especially when it starts getting larger, it definitely gets a lot more fun. Like, when you're getting a 20% return on like a 6-7 figure portfolio, that's pretty awesome,
It's like, you can be a clown and trade stocks, or you can just, sit back and, go to the beach and, drink margaritas, and then you make more money than most of these fools on YouTube.
Yeah.
So who's your favorite financial YouTuber?
Oh God.
By favorite, I mean the scummiest one.
Yeah.
You don't have to answer.
I think I'm gonna have to go with Meet Kevin on that one. And I used to like his content. Like, I think 2 years ago, something like that, I found his channel about real estate, and I was looking at buying this home, and I wanted to buy it like a real estate investor would buy a home, so that if I move, I can rent it out and it could be profitable, So I read some books. I ended up buying Kevin's course on real estate, partly because he had like the deal analysis and like the live stream or whatever. And then I hopped on the first live stream, and the first 25 minutes were all about like meme stocks. And I'm like, what the hell? Like, what's going on here? Like, what? And then there was like 2 minutes of deal analysis. I'm like, this is like absurd. And like, this content's ridiculous. Like, how did you go from, real estate investor to, the stock doc? Like, you're like, I just find it so absurd. Like the pivot and the, like, it just irritates me seeing, like, he's not adding value. Like, these people buying these courses, like the real estate course is pretty valuable, but like a stock course, like, sure, there might be a little bit of value you could get out of like the Boglehead's Guide to Investing book, or something like that you can get for $30,
or free at the library.
Yeah.
So, I'm pretty sure it's at my library. There's like a whole little section at the bottom. It's got like 5 basically Boglehead themed books. So I mean, with me, Kevin, I think you're probably right. He knows a lot about real estate. I'm not going to knock him for that, but he basically just pivoted to stocks because that's where he can really make the money. He doesn't care. He just wants to make as much money as possible.
Yeah, and it's been quite interesting the past week. Like, I was looking at I think he made a video, showing off his $52 million portfolio or something in November. And at the time he had like 32.5 million in stocks, and that's after margin. So like, it was more with margin. And now he's just liquidated 20 million. It's like, yeah, in like 2 months, you used to have 32.5, now you have 20. Like, that's,
he got decimated. I mean, I think he was losing so much money that he almost got to the point where he was going to be in the red for all time, and that's probably why he sold out. I mean, we don't know because we can't see his portfolio, but I mean, if you're a Boglehead and you've been buying the market consistently, I can tell you we're not even close to losing money right now. Even if the market dips 30%, we're probably still going to be well in the green because you've been buying the market, for the past 10 years or whatever.
Yeah, and I'm happy to keep buying it. It's as much as I don't like to see it happen, but I mean, it'd be good for me. I'm young. I
actually hope so. I mean, I have Vanguard, obviously. I actually put in an order for VTWAX today. That's the but it's the mutual fund for VT. I was like, it's like cool.
Nice.
I almost bought some individual stocks. I was like, you know what? I'm sick of buying these stupid stocks. And I just put like, a couple $1,000s into VTWAX. Don't care what the price is. Don't care what happens in the next year or 2, 3, 5, 10. Don't care. Just bought it because I think the world market is going to be a lot higher in 30, 40, 50 years. Could be wrong, but whatever.
Yeah, my wife and I get paid every other week. So every week, or like we're on alternating weeks. So yeah, every week we're piling in every penny we can.
So you're gonna retire by 40. That's the goal.
Yeah.
I mean, I'm sure. I mean, I'm sure you're doing well. And then if you're maximizing your contributions, I mean, because you're maxing your 401k and your IRA and all that, right?
Yeah, my wife and I are lucky. We both have employers that have the Mega Backdoor Roth IRA. So like, I don't know if people know about that, but the regular 401k, I think this year you can contribute 20,500, and then, but the actual limit on how much can go into your 401k is 61,000. And this is assuming you're not 55. If you're like 55 or older, I think you get more. But so some 401ks let you contribute after tax. So then once you hit that first 20.5, then you add on the employer match, and then whatever's left after that, you can go up to 61 and after tax. And then in our both of our 401ks, we can immediately convert it to Roth. You can actually automate it. So it goes into the fund, and they immediately convert it into the Roth sub account in the 401k. So it's something like another 60K a year we can put into the Roth between our two.
Ooh. I need to get my wife back to work. I need to stop having kids. Yeah. My wife, before she had our kid, she had just qualified for a 401k, and I was like, honey, your last couple of months at work, you're putting your entire freaking paycheck into that thing. Yep. So that's what we did. And then of course now she's not working, but yeah, if you have you and your wife and you both have Roths, IRAs, and you have 401ks, like, holy crap, you're saving money like crazy. That's awesome.
And the beginning of the year right now, 100% of both of our paychecks are going into the 401ks and HSAs and Roths until they're maxed. So
you're a madman, Nick. Yeah, this guy's definitely retiring by 40. I can tell you that. All right, so let's do some comments. See, here's how I'm going to retire, Nick. You want to see this?
Yeah. Nice. That's awesome.
I'm putting $5 into VT tomorrow. Thank you for giving us the truth, Army Strong Hua. Thanks, bro. Then I had another generous donation. See, this is the grift. This is the Boglehead grift.
Yeah.
Chris, 20 generous dollars.
Nice.
Wow. See, I'm turning into Matt Kors now.
Yeah.
Why does everyone in the chat seem like a bunch of random NPCs? Are they? I actually pay people to come in my chat, Christopher. You know, I make it seem like people actually follow my channel. Hope your channel keeps growing. It will. It will. Thank you for the donation, Christopher. No freaking way. Oh my God. Oh my God.
That's one of my best friends.
Holy crap. Thank you, Dustin. Nick, can you come on tomorrow?
Yeah.
Holy crap, man. Hopefully my wife doesn't see this. She's going to want to go buy something. Thank you very much, Dustin. I appreciate it for contributing. Anyway.
Yeah, thanks, Dustin.
Well, look at this, $1,000.
That's a sweet donation.
Thank you, Bassmaster. I think he like trolled me last time. He put like $2 in there. I was like, oh, thanks, man. And I clicked on it. I was like, is that a super chat or not? All right. So does anybody have any comments or questions for Nick? Let's see if I'm trying to read the chat, see if anybody had any interesting things to say. Ford, Tesla. Come on, any questions for Nick? This is like the Boglehead king. Okay. Love the interview. All right, Nick. So since nobody wants to ask you any questions, do you have any parting words for us?
I think we covered it. Thanks for having me on. And yeah, we should do one of these again at some point. It was fun.
Oh, we definitely will, especially your friend Dustin there. All right, so I'll put your YouTube in the comment. My keyboard actually works. It's Nicholas Doyle?
Nick Doyle. Sorry.
Nick Doyle. Yep. And achieve financial independence.
Yep.
Everybody go to his channel, you know, because like I know it's fun to have like, you know, objects on me, Kevin's face and my thumbnails, but you guys actually need to learn real Boglehead philosophy. And this is the man to do it. Boom. There it is. Hopefully I spelled everything right.
Yeah, looks good. Thanks.
All right. Well, thanks for coming on, man.
Yeah.
I had a good time.
I'm gonna go finish my coffee.
Yeah. Can we see the cup?
Yeah, have a good one.
Can we see the other side of the cup real quick?
Oh, yeah. 1 second.
Oh, I'm dying.
Like I said, as soon as that went on sale, I bought it immediately. I have to have that.
You're actually the last person I thought that would buy that.
Yeah, I'm gonna give it to one of my guests one day, and they're gonna be like, "What is this?
What is this?" All right, man.
Later.
Thanks for coming on.
Yep. See ya.
Have a good night.